But at some stage, right, tariffs and the cost of tariffs, the inflationary impact, it's got to start biting. Are you thinking August or September?
Yeah, so I mean, I quipped the other day, but it's true that if you were to kind of have been away for a year and not looked at the news, and you were an analyst looking at the economic data, particularly from Asia, particularly Asia's most trade-dependent economies, you'd have no idea any of this was going on. The only thing you'd notice is actually an unusual uptick in exports. And that's because trade has been front-loaded. These tariffs have kind of been paused and paused and paused, and even now they're going to be paused if you can get them on a ship in time. You won't have to pay tariffs until maybe November, I think. So trade front-loading has papered over a lot of this, but there will be payback, because there's been no fundamental increase in demand. You know, consumers in the US are not suddenly demanding more TVs. That demand has just been brought forward. It's been borrowed from tomorrow, and that means that tomorrow, the second half of this year and into 2026, demand is going to be a lot lower for imports from the US and elsewhere. So we're going to see trade numbers turning from quite strong positives to potentially very strong negatives by the end of the year. Yeah,
and I hate to say it, maybe even start the whole conversation about recession could rear its ugly head as well. Man's coming on this.
Yeah, absolutely. Yeah, just picking up on what you were saying there, Alex, about the trade tariffs have been paused and then started and then paused, and then there's just been so it's been so erratic and so volatile, hasn't it, in terms of what trade policy actually is. And we were talking earlier, Marty and I, about the impact on companies when it comes to their hiring decisions. I mean, you'd probably hit the pause button, wouldn't you? Not just on hiring, but also investment. Do you think that this is just temporary and that we've got more clarity now with regards to trade, so therefore hiring might be able to resume? Or do you think that essentially the tariff policy that Trump is implementing is going to blow back negatively on the US economy?
I mean, we somewhat have a bit more clarity. We know that tariff rates are going to settle at 15 to 20%, and let's not let our expectations be reset. This is really bad. This is a huge leg up in tariffs that we haven't seen before, and it's going to have an effect. But to quote Churchill, it's not the end. It's not even the beginning of the end. It's just probably the end of the beginning. And Donald Trump is going to come back on things. He's going to pick up on things like the transshipment clause that was in the announcement on last week. He may even, revisit a lot of these tariff rates. There's still deals to be done. India, Taiwan, Switzerland are without a deal. So it's still an evolving landscape. And let's not forget, these are just the reciprocal tariffs. We've got sectoral tariffs as well to contend with, Section 232 investigations. So I wouldn't say we've got much more certainty, to be honest. And that uncertainty has a big economic cost, as you allude to. Which hiring manager is going to, have a big cost base on that kind of unit of the business that they run, or CEO? They're going to be thinking about when the axe is going to fall. So uncertainty is going to paralyze economic activity.
Absolutely. And I mean, obviously part of the tariff thinking is that it's going to raise revenue, but also Trump wants to achieve his goal of getting more manufacturing and jobs created in the United States. And yet we heard from Ford saying that it's going to, they actually assembled most of their cars in the United States, if I'm not wrong, and they were saying that the tariffs are going to cost them, up to $2 billion this year. I mean, surely a better way to, make the US a more attractive place to do manufacturing or to do business or to reshore would be to cut the corporate income tax rate.
Yeah, well, US manufacturers are very much integrated into other countries. So auto producers, you say, like auto parts, in the supply chain crosses the border between Canada and Mexico many, many times before that finished car rolls off the production line. So that will be hit by multiple tariffs, and they're going to have to completely change the way they do business. So even the companies that ostensibly the US government is trying to protect, they're actually, of course, damaging by making inputs and their process a lot more expensive.
So from the Asian point of view, how much will we see supply chains realign, or have we already seen post-COVID that supply chains have done a lot of realignment?
Yeah, that's a good question. As you said, there's been a lot of realignment already, particularly between China and the US. But I would say that during the first batch of Trump tariffs in 2018-19, a lot of that, trade between the US and China kind of realigned and started flowing through third countries, so Mexico, but a lot of ASEAN as well. Now that that wall between the US and China is higher and less porous, perhaps that's not going to happen as much, and those Chinese goods that might have flowed elsewhere are now actually going to go in search of new markets and not try to get around and go to the US. And that's a concern actually for a lot of third countries, that they might see a flood of cheaper Chinese goods that were originally destined for the US, and that brings lots of kind of geopolitical and political considerations as well.
Where are we standing with some of the smaller economies in Asia, like Bangladesh, Sri Lanka, Cambodia, the kind of countries that have been benefiting from the China Plus One supply chain strategy, which were originally facing very, very high tariff rates, and perhaps I'm breathing a little bit of a sigh of relief now that they're not going to get as high as we originally thought?
Yeah, thankfully, those tariffs, and I say this thankfully, our expectations have been reset, but, thankfully they're not going to be facing 40, 45, 38% tariff rates. That would have been devastating for their economies. They are quite dependent on the US market for exports, particularly of ready-made garments. And if tariff rates had gone up to 40%, that would have been devastating. So 20% is actually, a relatively good result for some of these smaller economies. Their export sectors are, they're going to be able to continue exporting to the US. And that, brings us to another point, which is that the relative rate of tariffs has kind of settled at a similar level. So there's not going to be great amounts of tariff-driven trade diversion between economies, because no one really has a particular tariff advantage.